Have you ever wondered how fluctuations in India's oil trade impact the domestic economy? Well, let's set the stage with a quick primer on oil trade. In simple terms, it's the global buying and selling of crude oil, the lifeblood of modern economies. Now, for a country like India, oil trade takes on a whole new level of importance. You see, India is one of the largest consumers of oil globally but doesn't have ample reserves. So, it heavily relies on oil imports to keep its economic engine running smoothly. But here's the catch. The global oil market is like a roller coaster, unpredictable and full of ups and downs. Any significant shift can send ripple effects across India, influencing everything from the price you pay for your morning commute to the country's balance of payments. So you see, India's oil trade plays a significant role in shaping the country's economic landscape. Now that we understand the importance of oil trade to India, what happens when there are sudden changes in this trade? Let's dive into the effects of fluctuations in oil prices on various aspects of India's domestic economy. Imagine a scenario where global oil prices rise. This could lead to inflation in India, making everyday goods and services more expensive for the average person. It's like a domino effect. Higher oil prices mean higher transportation costs, which then trickle down to affect the price of almost everything else. Furthermore, a surge in oil prices could negatively impact India's balance of payments. How so? Well, India is a net importer of oil, meaning it buys more oil than it sells. So, when oil prices rise, India has to shell out more money to purchase the same amount of oil, leading to a larger trade deficit. On the flip side, a drop in oil prices can provide a significant boost to the economy. Lower oil prices mean reduced energy costs, which can stimulate economic growth by making goods and services cheaper to produce and transport. But it's not all left to the whim of global oil prices. The government plays a crucial role too. Through policies and strategies, it can help mitigate these impacts. For instance, strategic oil reserves can act as a buffer during times of high oil prices, while subsidies can help keep energy affordable for citizens. Clearly, the ripple effects of shifts in the oil trade can be felt across the entire economy. So, what are the key points to remember from our discussion today? First, India's oil trade plays an instrumental role in its domestic economy. Changes in oil prices can have a significant knock-on effect on various sectors. Second, the government's policies are crucial in managing the impact of these changes, helping to maintain stability. As we've seen, India's oil trade is a vital cog in the economic machine, with far-reaching impacts on the domestic front. Keeping an eye on this sector is crucial for understanding the country's economic trajectory.